United States President Donald Trump has promised a swift economic restart for Venezuela, heavily relying on its vast oil wealth following the arrest of Venezuelan President Nicolás Maduro. Speaking over the weekend, President Trump stated, "We will send our very large United States oil companies, the largest in the world, there so that they can invest billions of dollars, repair the heavily damaged infrastructure, and begin to earn money for the country." He added that a lot of money will come out of the ground. However, reports suggest that the major oil corporations were not informed of the president's plans beforehand. Furthermore, oil prices are currently low, indicating an oversupply and weak demand, which makes producers hesitant to invest. Not to mention, large oil companies have lost billions through past investments in Venezuela. So how realistic are President Trump's promises of rapid reconstruction and increased production? Let's look at the key questions and answers. Venezuela possesses the world's largest proven crude oil reserves. According to the International Energy Agency, these stand at around 303 billion barrels, representing about 17% of global reserves. For comparison, Saudi Arabia has approximately 267 billion barrels, and Russia about 80 billion barrels. Despite these enormous deposits, Venezuela's significance to the oil market is small. In the year 2015, the country produced an average of around 1 million barrels per day, less than 1% of the global production of nearly 102 million barrels daily. Consequently, oil markets barely reacted after President Maduro's arrest. The Brent crude price hovers around $60 per barrel, significantly below its peak in recent years. The Organization of the Petroleum Exporting Countries, which Venezuela co-founded, also saw no immediate need for action and left its production policy unchanged. Venezuela's oil industry was highly productive for decades. In the 1970s, the country temporarily produced up to 3.5 million barrels per day and was one of the United States' most important oil suppliers. Even in the 1990s, production was well over 2 million barrels daily. The long-term decline began in the early 2000s under then-President Hugo Chavez. Following a general strike in 2002, the government dismissed around 19,000 experienced employees of the state oil company Petróleos de Venezuela S.A., known as PDVSA, replacing them with politically aligned loyalists. From 2007, Chavez nationalized large parts of the industry and worsened contract conditions for foreign companies, many of which left the country. In the following years, investments collapsed, and maintenance and modernization were neglected. Corruption and mismanagement increased, leading to the decay of refineries and production facilities. Adding to this is a structural peculiarity. A large portion of Venezuelan reserves consists of heavy crude oil from the Orinoco Basin. This oil is much thicker than so-called light crude oil, making its extraction and transport significantly more difficult. Heavy crude oil also contains more sulfur and other impurities that require extensive processing to remove. While light crude oil on the Arabian Peninsula can be relatively easily pumped from the ground and processed into gasoline or diesel in standard refineries, heavy oil must first be mixed with diluents like naphtha to flow through pipelines. After refining, it is primarily processed into diesel, marine fuels, as well as asphalt and bitumen for the road and construction sectors. United States sanctions further exacerbated the situation. In 2019, the United States imposed an embargo on Venezuelan oil. Production temporarily fell to only about 350,000 barrels per day in 2020, a historic low. Many buyers avoid doing business for fear of penalties. To sell oil nonetheless, Venezuela has resorted to detours such as so-called ghost ships or intermediate stops in Asia. Since mid-December, an additional United States blockade has applied to sanctioned oil tankers attempting to access or depart from Venezuela. These measures have contributed to Venezuela's deliveries, accounting for less than 1% of the global oil supply. Chevron is currently the only major United States oil company with ongoing production in Venezuela. Market data indicates the company produces between 200,000 and 250,000 barrels daily, accounting for about a quarter of Venezuela's total production. This is possible due to a special license from the United States government, allowing Chevron to operate with the state-owned PDVSA and deliver crude oil to refineries on the United States Gulf Coast. Other former heavyweights like ExxonMobil and ConocoPhillips withdrew after the nationalizations under Chavez. They later sued for compensation, and international arbitration courts awarded the companies several $billion, though they only received a fraction of that amount. Besides Chevron, the European company Eni and the Spanish firm Repsol remain active in Venezuela, primarily in the offshore natural gas business. The gas extracted is mainly used for the country's electricity supply. Temporarily, these companies received oil in return, which they were allowed to export, a barter deal to circumvent sanctions. This practice has largely ceased. The United States recently prohibited such barter deals involving Venezuelan oil, leaving Eni and Repsol with their extracted gas. According to analysts, initially, only companies already present in the country or with existing experience there might invest. However, re-entry would only be economically viable if sanctions were eased and the political situation stabilized. The United States government has stated that existing sanctions against Venezuela's oil industry will remain in place for now to maintain leverage over the country. Substantial investment would be needed for a significant expansion of production. Industry experts estimate that around $7 billion would be required just to increase production to about 1.5 million barrels per day. To eventually reach 2 million barrels per day, the necessary investments could total $15 to $20 billion. Beyond producers, oil processors also play a crucial role. Several refineries on the United States Gulf Coast specialize in processing heavy crude oil. Many of these facilities have been specifically designed over decades to handle Venezuelan oil. United States refinery operators such as Valero, Phillips 66, and Marathon Petroleum are therefore considered potential beneficiaries of increased supply from Venezuela. According to research by the Wall Street Journal, Chevron and other energy companies were not informed of the government's plans before the United States military operation. President Trump's announcement that major United States corporations would now invest billions of dollars came as a surprise to the industry. None of the large oil companies have so far announced concrete investment plans for Venezuela. ConocoPhillips stated it was too early to speculate on future business activities. Chevron announced that it strictly adheres to existing sanctions and permits. Nevertheless, President Trump's announcements were quickly priced into financial markets. Shares of companies considered potential beneficiaries of a reconstruction saw significant gains on Monday, including Chevron, ConocoPhillips, and oil field service providers and refinery operators. China is currently the main buyer of Venezuelan crude oil. Estimates suggest that up to 80% of Venezuela's oil exports go to China, often via intermediate stops like Malaysia. However, these deliveries constitute only a small fraction of China's total imports. Furthermore, the People's Republic is reportedly hoarding large quantities of sanctioned oil in floating storage, securing its supply for months. Another country is significantly more dependent. Cuba is estimated to cover around 30% of its oil needs with deliveries from Venezuela. These imports are considered central to the island's energy supply. If they were to cease, it would have drastic consequences for the communist-ruled country. In recent years, deliveries had already significantly decreased. Experts consider quick successes unrealistic. Even with favorable political conditions, it would take months to years to repair dilapidated facilities, bring back skilled workers, and implement new investments. Comparisons with other countries show that rebuilding a struggling oil industry is a lengthy process. After the United States invasion and regime change in Iraq, it took years for oil production to return to pre-war levels. Stay tuned for more updates on this developing story. This video was generated using artificial intelligence. Thanks for watching. If you enjoyed this video, don't forget to give it a thumbs up and subscribe to our channel for more updates. See you next time.